Welcome to Disruptive Successor, a show for next generation leaders in family businesses and entrepreneurs who want to disrupt the status quo and take their existing business to a whole new level. We all know that what got us here isn't going to get us there. This show will provide inspiration, advice, and resources to help you create massive impact. This podcast is sponsored by myself, Jonathan Goldhill, and my company, the Goldhill Group, where we provide coaching for growing companies. I'm Jonathan Goldhill, and my purpose is simple: to guide entrepreneurial leaders in family businesses towards more freedom and fulfillment. I want entrepreneurs to get clarity around the changes that will make them and their businesses more successful so they can experience the same freedom I've enjoyed in my life. Our proven practices challenge business owners to think differently about their business and how they're running it, and quite literally become game changers in our clients' companies. Learn more at thegoldhillgroup.com website, where you can schedule your free strategy session. Hi, it's Jonathan Goldhill, and welcome back to another episode of the Disruptive Successor Show. Today, we're going to be talking about some of the research behind family businesses, what makes family businesses, what makes them different from other businesses. And I have with me Danielle Valkner, who is a partner with PwC, formerly known as PricewaterhouseCoopers, one of the largest accounting firms in the world. And she serves as the private U.S. family office leader out of Chicago, where she works with enterprising families to preserve and grow their legacy and develop strategic plans to realize their goals for the family and their enterprise. She also assists clients with strategic initiatives in the area of strategic planning, finance effectiveness, corporate finance, among other financial services. Danielle has over 25 years of experience focusing on finance effectiveness, technology, and operations. Danielle, welcome to the show today.
Hi, Jonathan. Thanks for having me.
All right. So this is going to be a really interesting show because it's really rare that I get someone who's working at such a prestigious and large firm that's doing real primary research on family businesses that isn't coming out of the university, or college group. And so I want to understand first, personally, where did your interest start in family enterprises, their legacy, and helping them build world-class operations to support the needs of families today and future generations?
So for me personally, I spent a large part of my career in the asset and wealth management industry working in alternative asset management. And I was a CFO for several years and headed up operations. And then the financial crisis hit, and I decided to look for the next part of my career and landed at PwC to help alternative asset managers deal with all the regulation that was coming up after the financial crisis. And as part of that work that I was doing, working with the asset managers, family offices and family capital always came up. They were such a large investor base that the managers were trying to attract. And I was working more and more with private capital and was very intrigued and actually inspired by what they were doing with their capital, and was fortunate enough to move over to our family enterprise group at PwC to focus on this segment full time.
That's awesome. That's awesome. So PwC's been doing these kind of studies for how long now?
So we've been doing this, for at least over 10 years. We have a biannual survey that we do, really drilling into hot topics and areas of interest for family businesses and their owners.
And how did or why do you know the history of why PwC started studying family businesses? And just step back and tell us why it's so important to them, maybe.
Yeah, so we've been serving family businesses since our beginnings 170 years ago. So it's always been a focus. I think what's different for PwC is that we realized very early on that there was something different and something special about family businesses. And so we put a lot of time and energy in really understanding what those differences are. And we came up with a framework that we call the owner's agenda. And it really is an infinity wheel where one side of the infinity wheel is the family business and all of the challenges and needs that family business is dealing with, all areas of focus that PwC helps them overcome. And then the other side of the wheel is where it gets really interesting, and that's the ownership side. And so that's where we see a lot of unique needs and especially a lot of unique dynamics in these business owning families. So the ownership side, we deal with things like continuity and succession planning, governance, wealth planning, and strategy and purpose. And so that is where we see a lot of complexities. So we built a dedicated practice to focus full time on this segment. And now in the US, we're 2,300 employees strong and serve over 3,000 families.
Amazing. So we're going to talk a little bit more about the types of businesses you serve and the research. But I want to kind of get into a deeper question. And I'm going to kick this question off by exploring or sharing some of my why. But the question really is why does it matter for professionals like you and me to help others realize their purpose and dreams for the future, but specifically family businesses? And my story is one of where my family built a very large, multi-generational clothing manufacturing business, actually the largest private label men's suit manufacturing company in the country, over a couple thousand employees. And it didn't make it into the fourth generation because they're really the third generation. I would have been the fourth generation. The third generation, there just weren't that many of them, and they were in-laws. My dad was one of them. He was a son-in-law. And unfortunately for him, he died in 1960 when I was just 2 years old. And he had started out with the company. I was probably with them for maybe 10 years because he was all of like 35 when he passed. And so the business got sold. And I was always fascinated by the legacy of that family business and by the richness of it, even though I never really saw it outside of going into a showroom in New York City and seeing all the men's suits. And then eventually I got to go get men's suits for a really discounted price because my uncle was still in the industry. But when I came full circle I got out of business school and wanted to become an entrepreneur or a coach or consultant to entrepreneur. And then I started realizing family businesses is a great space. And I work really well between the two generations, the older and the younger, and helping them communicate and not so much plan the succession, but communicate through the whole succession. And so for me, my why has always been about the fact that I can communicate really well, understand and believe in the importance of family harmony and, keeping it together and helping them move to the next generation. But I'm wondering for you, like, what's been your why? Why does it matter for you in this industry? And if you've given it much thought, I think it's a deep and difficult question to answer. And I'm kind of hitting you a little cold with it, but that's my warm up for you to answer.
It is. No, thank you for sharing your story, because that is exactly why I love working in this business, is hearing all of those stories and understanding the legacy of these families and how they generated their wealth. The stories are amazing. And then today, what they're doing with the wealth, that's where I get very inspired. Our family businesses and our private wealth owners are changing the world when it comes to investing and protecting the environment, making a difference with a lot of the social issues that we're facing today, and coming up with really innovative and entrepreneurial solutions in the marketplace. And so I get super excited about all of those things. Early on in my career, I was serving large banks, asset managers on a very large scale. And I always felt like I was providing a valuable contribution, but I didn't really feel it. And now working with family businesses and their owners, I really feel the impact and get inspired by their stories.
Well, it's interesting as you say that, because a lot of the businesses that are unicorns, billion-dollar valuation companies, are digital. They're high tech. These are not typically family businesses. I mean, when I think of family businesses in the United States, I think of manufacturing, construction, and service companies. And I don't think of software as a service or tech companies, and most of them aren't. And most of those companies that, I don't know, are household names like the Amazons and Airbnbs and Ubers and the things that we use almost, so regularly in our business, Google, they're not family businesses. And yet those don't make up the majority of businesses in the United States at all. So it's interesting. So I know that one of the challenges in family businesses is how they're approaching digitization, digital technology. What were some of the findings in your most recent survey around this area?
Yes. So this was an area that really surprised us in the survey, because as we're working with our clients, both large and small, everybody is focused on technology, not only internally, how can it improve our operations so that we can improve our bottom line, but customer facing technology and being really innovative on that interaction model. And so in the survey this year, we realized that only 39% of businesses believe that they have strong digital capabilities. And so I get that, right? Because it's hard to keep up. But then a very small percentage said that they were actually focusing on digital capabilities, in the next 2 years. And so it was that percentage that really surprised us. It was 33%. And it really should be a much larger number. And so we're trying to understand some of the reasoning why that is such a low number. And I think for some of the smaller businesses, maybe they've invested in putting in a new ERP or accounting system, and they're proud of those accomplishments, and they think, okay, we got that behind us. The thing is that you're never done. The world is moving so fast that you have to be constantly innovating to just keep up. And so we really thought that number was going to be much larger. And I think that that's a risk that the family enterprises may be getting too comfortable. It's funny. We work with a lot of these families that have like old family sayings and very strong principles. A lot of times, one of them being that we probably all grew up with was, if it's not broke, don't fix it.
Mm-hmm.
That adage really is changing today. Now you hear that good isn't good enough. You really can't get comfortable and take comfort and confidence in the status quo. You have to constantly be thinking about what's next.
Yeah, so true. And so few of these businesses are based in technology that it almost sounds like there's a digital divide between family and non-family businesses. Do you think
I think that I do. It's possible. But I also think if you think about some of these principles and legacy of these families, they're really rooted in loyalty and trust and personal service, right? And so I do think that a lot of our family enterprises are uneasy with the technology developments that are happening and wanting to keep things close and personal. And there's something to say for that, right? But you just need to always understand, the risks and kind of what you are and what you aren't.
Is there something that we can be doing as professionals to support them better? I know in my practice, I use a software basically, to help them manage their meeting and communication rhythm. And that I suggest that they set up meetings for managers, for departments, for the leadership team, maybe for the executive committee, maybe even for family meetings. And that they use this software to communicate their to-dos, their priorities, their quarterly goals or objectives. We call them rocks, and things like that. And I think just some of that simple technology helps to facilitate dialogue and communication, which is really good for succession planning, but also really can be useful in governance.
Yeah, I think starting out small is very important, and then taking that as an opportunity to learn and to grow. And so, we were all forced into this digital world when COVID hit, and everybody had to figure out how to use Zoom meetings and how to operate their business a lot of times remotely. And so I think people have come a long way, but we absolutely need to keep going along that journey, and whatever that journey is with your company, but understand that if you don't disrupt yourself, someone else will do it for you. And so I think the education around what are the opportunities out there and what's the right size solution for your organization and your family. One thing that we have to talk about is cybersecurity. If you have any sort of customer data, you need to make sure that you're protecting that data. It's so important to earn your customers' trust and to allow them to do business with you. During COVID, everybody was thrust into this digital payment world, and a lot of the relationships that used to be business to business became business direct to customer. And customers were going online and putting a lot of personal data out there and trusting that the company is going to protect it. And we have done several surveys throughout PwC, and one of our surveys represented that just 40% of the companies feel that they have really done enough to protect that data. And so really need to stay on top of that. For smaller companies, don't go it alone. Hire an outside advisor. Get the experts out there that know how to do this at scale, and you can benefit from that. But there are new cybersecurity tools that are coming to the market every day, and you don't want to be one of those victims, where you need to disclose to your customers that their data was compromised.
So the really small mom and pops are using things like PayPal and Venmo and Zelle. I presume we can trust those because they're fairly well capitalized, institutionally supported, backed. I don't know what the middle market or smaller businesses are using as far as customer data. I mean, the more sophisticated ones are probably using things like Oracle, NetSuite, and capturing that data. Also fairly institutionally supported and backed. I mean, I guess the data breaches, you don't know where the data breach is going to happen. So
right. And so the most important thing is knowing where the data is. So when you're using Venmo and PayPal, a lot of times you get communications about your customer through those platforms. And so you need to understand what you have possession of, where it is, and how it's protected.
All right, let's switch gears here and let's talk a little bit about governance. I know that's an important area of your work, part of the work of your study. And I think there's a real gap between larger and smaller organizations and where corporate governance really starts to play a key role. In my experience working with the clients that I work with, most of them are smaller companies. Let's just say they're $2 to $20 million in size on average. And most of them just are in the process of transitioning to a more corporate run type business from, I hate to say it's mom and pop, but like from just family owned, controlled with very loose processes, not a lot of structure. Your study revealed that 2/3 of family businesses say they have a clear governance structure, and about 2/3 have a person responsible for corporate governance. Let's talk about, what do you mean by corporate governance? What does it look like? And at what size entity are we talking about, or was your study focused on? Because I know it was a global study where it's really looking at these issues. So talk to us about these.
So let's talk about the study and the profile of who was surveyed. So we did survey over 2,000 family businesses. Of those, approximately 100 were in the US, and they were of all different shapes and sizes. So we had representation at the $10 to $20 million annual revenue and on up. And also representation across first generation up to multiple generations. So we are getting a lot of diverse demographics in these results. And so as we look at that, 2/3, that 66% that have clear governance in place, it probably is some of the older, more mature and larger organizations that have done that. But the truth of the matter is that governance exists. What it is it's how you make decisions. And so how do you make decisions for the family business? What sort of information do you share? Who are the stakeholders, and how do you manage risks? That's all about governance. A lot of times that's happening, but it may be concentrated in the first generation wealth owner. And so to them, it's very clear the governance is them. And so everybody has a form of governance in place. But it gets more complicated as more family members get involved and you start to have multiple generations, and really understanding what information is going to be shared and who has the decision-making powers. We see families struggle with this all the time, no matter where they are in their life cycle. And the key to governance is that you really need to have the policies and the procedures in place before you need them, right? Because if you wait until you need them, then it's too late. Then there's going to be a blow up. There's going to be a misunderstanding. And so we really help companies and business owners understand what is the right size governance for where you are today, but also what do you need to be thinking about 5, 10, 20 years down the road, and maybe put some basic principles in place today that can evolve with your company. But no matter what size or where you are in the life cycle, you really do need to be thinking about this if you want your business to be there for generations to come.
Okay. I have a tough question. I'm not even sure I can answer it myself. So let's see if we can work through this together. So your research, and your research basically, I'm going to simplify a little bit. Your research said that 80% of respondents, so 4 out of 5 people, said that protecting the business is the most important, as the most important family asset is their top long-term goal. And that 70% want to ensure the business stays in the family. Is this about protecting their inheritance, their legacy, something else? And, why should this matter, or does it?
Yeah, I think it's all of the above, Jonathan, and it's different for every family. And that's what makes working in this industry so interesting and rewarding, because you really do need to figure out every single family is different, and their wants and their desires and the why they are doing this is different. So we've actually partnered with Kellogg at Northwestern in understanding, how do you create continuity of your family business as well as your wealth? And the number one hardest question is, why are we doing this? And so you really do need to answer that first. And then once you get the why answered, everything else tends to fall in place. But I think often people skip over that and they just take it for granted. We're doing it because we want to be successful, because we want to support our family. But when you really, really sit down and think about it, it's very important to uncover the true whys and what's important to you. And then you can design the governance and everything else to get you there. So
are family businesses the real job creators, do you think? I mean, I don't know if you know who Vern Harnish, he started an organization called Gazelles and Scaling Up, and he started Entrepreneurs Organization. And he always talked about how middle market companies, they're the real job creators in the world. And which is surprising because most of us think of Amazon, Google, these types of corporations as the real job creators. And I wonder actually whether Uber and Lyft and Airbnb, which is kind of it's like a gig economy job creators, but like, who are the real job creators in the United States? And do you guys have any research on that?
I'm sure we do. I don't have it off the top of my head, but I will tell you that the number of public companies in the U.S. is declining. So back in 1990, it was about 6,000 publicly listed companies. Now we're at about half of that. Wow. A lot of that is due to consolidation, but there has also been a lot of exits out of the public realm. And alternatively, you look at private businesses. I'll tell you, the number of billionaires in the U.S. is steadily increasing, and the private wealth accounts for $6 trillion of capital globally. So this is a major force, and it all starts with the entrepreneur and the family business. Mm-hmm. And so nobody knows what they're, whether they're really on to something and they can be the next Google or the next Amazon, right? But I think family capital and entrepreneurship and family businesses are a major force in our economy.
Totally agree. And so what else about the study did we not touch on that came up that's either surprising or worth sharing? I mean, you'd be surprised, maybe you wouldn't actually, how little family businesses know about their significance as family business owners, and that that common bind that ties them together. So I find that when they hear this type of information, they're shocked. The most shocking statistic that I've ever run across is that somewhere around 97% of all businesses in the country of India are family owned and controlled. But I digress. Well, look, what were some of the other findings that stood out about the Family Business Survey?
So, somewhat related to the technology comment, I was really surprised to see that only 55% of the businesses feel that they have real-time data available to them when they need it to make decisions. That is a very low number. Mm-hmm. And there are a lot of innovative solutions out there today to help you get that real-time transparency into your business intelligence, into your data, and to do the analysis that you need to do and have it available to you. So there's obviously a lot of opportunity there to increase those numbers. And you can start out small. There are a lot of very affordable platforms out there that can help you get that business intelligence. So I think that is an area of focus. But then thinking through on what makes these family businesses different, and a lot of it is that the story, the legacy, the purpose of the family business. And a lot of families feel that they have their mission statement and their legacy and purpose formulated, but it's not documented or shared. And that is a huge missed opportunity, because in this world today, trust is such an important issue. And really, to grow and to be successful, you need to have the trust of your customers and the trust of your employees. And so sharing with them that mission and what you're doing, sharing that why that we talked about, and providing the data around that to your stakeholders, whether that be your customers or your employees, is really important. And I think that is a missed opportunity in the survey results today. There was, less than the majority of the companies were documenting and sharing that. And so I think that is an area where we definitely need to, it's just a missed opportunity. And it's what differentiates these family businesses.
Danielle, do you think it's the responsibility of the next generation, the successor, the one I typically would like to call them a disruptive successor, because they're bringing in technology that previously didn't exist inside the company? Or is it also the responsibility of the predecessor, or at least just to support it as an initiative? Any thoughts on that?
I do think when it comes to, technology, sharing your story, all of these things, the tone has to be at the top. And so whoever is, kind of in the leadership role for the family business, I think it's really important to embrace these principles and to make it become part of the DNA of the business. We definitely see a direct correlation between companies that build trust and companies that are very profitable. So there is a direct correlation to the bottom line. And I do think companies need to be focused on this sooner rather than later. And it's sort of a secret weapon that these family businesses have, and they're not always using it.
I like the idea that there's a correlation between trust and profitability, between transparency and profitability, and between like a reinvigorated purpose or clear purpose that's communicated and profitability. I think they all kind of, I'm seeing charts in my mind of and they map together, like in terms of like employee net promoter score would track with profitability, like parallel lines going upwards as it improves. So, all right. So like, what's at stake if families don't embrace digital transformation? I mean, is this just a simple grow or die type of a future? What else is at stake beyond maybe that concept?
Yeah, I think that to be successful, you have to constantly innovate. And it gets back to that comment of good is not good enough in today's world. And so, I'll share with you a quote that was recently shared with me. Our senior partner met with the chairman and CEO of Kraft. And, he really summed things up that we're seeing and what makes the difference between, really great and leading companies and just good companies. And he said that leaders need to be agile in a constantly changing environment while continuously investing in people and fostering innovation. And so you can get a sense from that. Like you can't ever get comfortable. You always have to be, investing in innovation and in your people. And the companies that we see doing that are rapidly rising to the top.
I think that's great. I was recently at a family business conference up in Sacramento where one of the keynote speakers was a young woman, recent graduate of UCLA, either in the third or fourth generation, I think third, in her family's business. It's a household name. I think most people would know who like baked goods. It's King's Hawaiian Bakery. And she was sharing how I think it was the third or fourth gen folks, these are kids in their 20s, were coming to the family with all sorts of product suggestions of what they could be adding. Now, this is a company who's probably made 80% of all of its money off of just the rolls that are sold at the deli counters. And they're so good, they're so popular that it's like a single product that has made most of their money. And so what the family did was, rather than shoot these ideas down, they brought in an outside person who was like a venture startup type of a business trainer, coach, whatever, an entrepreneur's coach. And they put all these young people through a boot camp of how to come up with a product, how to do the projections around it. And so now the plans that were coming forward to the executive management team were that much better thought through. And the senior family leaders could make a decision as to whether they wanted to go or no go, because otherwise they were just pushing it back and asking questions. Now their family was investing in the development of these people. I thought that was a great example of
a fantastic example.
Training future leaders. Yeah.
Yeah, we've seen companies, if you could take just a small amount of your capital and put it aside for venture type exploration, and that is really where you get that next generation excited about the business.
Yep.
And so we've seen companies do that with kind of reinventing the business, but then also on the philanthropy side, bring that next generation along and let them have a say in the philanthropic efforts of the family. Those are great ways just to build unity and purpose and to prepare the next generation to take a leadership role in the company.
And so is philanthropy a discussion that starts in the boardrooms around corporate governance, where it's let's expand our footprint to do something good in the community? Yeah.
Yeah, I think most family businesses are doing that. In our survey, 81% of the family businesses were involved in philanthropy, but not all of them tie it to their business. And not all of them talk about it. And so, again, missed opportunities there, and just getting personal and reinvesting back in the community, letting people know what you're doing, and kind of taking a stand on things that all builds that trust that can really help the company be more successful.
Yeah, I totally believe in that. About 5 years ago, my financial advisor introduced me to his pledge to give back, which he did in around between Thanksgiving and Christmas. I immediately adopted that. It became a permanent part of my coaching program. And I do it. I give 5% of a client's coaching fees away to an organization of their choosing, in their name, on their behalf. And I'm trying to do that to encourage stewardship. And I try and coach them a little bit through that, because they have sometimes trouble picking an organization. And I say, let's talk about your business and what your brand represents and how you can extend your brand and do something in the community. So one of the ways I do that with my own money is by sponsoring some family business initiatives, entrepreneurship initiatives, because I think it supports the extension of my brand. And I think it's really important to teach that type of legacy stewardship. I'm sure you agree.
100%. I mean, Jonathan, just by you sharing that story, I feel like I know a little bit more about you, right? And it's a great story, and it's inspiring. And so it inspires others to do the same thing, just like that individual did to you. And that's exactly what we need to be doing. Yeah,
exactly. And I realize in this podcast, I don't really share that much about my story. One, how I came to get into family businesses, and two, I rarely talk about this stewardship initiative, but I do think it's so important. Because I think that we have the potential to be thought leaders in the minds of our clients and prospective clients, and our voices can and need to be heard. All right. So beyond tech, what challenges are family business leaders facing when it comes to corporate governance, succession planning, any other things come to mind?
I think we hit all the big takeaways. Coming out of the survey, it wasn't so much what the families are focusing on that were a surprise. It was the things they're not focusing on. And so those are some of the themes and the messages that we're drawing out of that.
Mm-hmm. Got it. All right. So tell us maybe a little bit more about what you're doing in your work or your practice, or, you're obviously coming on these podcasts, you're sharing the story of the survey. What does PwC hope to get out of this type of involvement?
Yeah. So we, similar to you, we want to help our clients be successful. And so when I was in industry as a CFO in the asset management world, we were hiring the best and brightest talent out there. And we believed that nobody knew our business as well as we did. And that we could do it better ourselves. And we were pretty good at it. However, we missed an opportunity to really learn from others. And so I think that's really where organizations like PwC can be so valuable, to bring that outside in perspective. You don't have to recreate the wheel. And let us use the learnings that we have across our firm with all the different clients that we've worked with to help you be successful. And I think there's real value there. And so I am a transformed person, where I used to be very skeptical of consultants, and they're still, they're not all great consultants. But once you find a really good strategic advisor and business partner, you can, really achieve great heights with whatever your strategy is. And so I get a lot of personal satisfaction out of that, as do my fellow partners at PwC. And the great part about working with family businesses is it's just so fun and interesting. So I feel very fortunate to work in this segment.
Yeah, I feel that same way. I feel like our job is to help point out the blind spots that our clients don't see. We have our own blind spots. There are some things that are public and that we don't even see ourselves, but other people see it looking from the outside. And our job is to help shine a light and provide some direction and guidance of how to remove that blind spot, so that it removes the obstacle, so they can grow or innovate. And, I think Peter Drucker said it right when he said marketing and innovation are the only two things that really matter in business. Everything else is a cost. But when it comes to a family business, having a clear purpose, communicating that purpose, and really spending time developing the leadership so that the next generation of leaders can take over the business and take it to the next level, they can really matter. And, why not start from a great foundation than always having to start up and recreate the wheel? There's a lot of capital that's expended in startups, and most people don't realize it. And most people know that 9 out of 10 small businesses fail, but that's probably the same success rate of even the venture capital backed businesses. Probably 5 out of 10 of them just go away. 3 are kind of not that significant, and 1 or 2 maybe hit a home run. So it's important work we're doing. Any closing thoughts?
No, I completely agree with all of that. And thank you for having me today. This was a great conversation.
Really deep. So appreciate it. All right, Danielle Valkner, they can get a hold of you if they want, or if they want to get a hold of the study. Where do they access it?
So you could go to pwc.com and just search Family Business Survey. And we have a dedicated site with all of the information.
Awesome. And they'll find you too, I imagine.
As well. Yep.
Fantastic. All right, folks, if it isn't clear already, if it's what you don't know that can hurt you, and to quote John Wooden, I don't know who I took that quote from, but to quote John Wooden, it's what you learn after you know it all that really counts. So this has been another episode of the Disruptive Successor Show. This one is focused a little bit on data and research. So great to have Danielle Valkner with us from PricewaterhouseCoopers. I still call it that, PwC, the short and abbreviated name. Check out some of their research. And folks, you know the drill. If you like this show, please share it with others. Please give us a good rating on your podcast listening app of choice. and stay tuned for future episodes of the Disruptive Successor Show.
This podcast is sponsored by myself, Jonathan Goldhill, and my company, the Goldhill Group, where we provide coaching for growing companies. I'm Jonathan Goldhill, and my purpose is simple: to guide entrepreneurial leaders in family businesses towards more freedom and fulfillment. I want entrepreneurs to get clarity around the changes that will make them and their businesses more successful so they can experience the same freedom I've enjoyed in my life. Our proven practices challenge business owners to think differently about their business and how they're running it, and quite literally become game changers in our clients' companies. Learn more at thegoldhillgroup.com website, where you can schedule your free strategy session.
Thank you for joining us on the Disruptive Successor Podcast. If you enjoyed today's episode, please subscribe, review, and share with a friend who would benefit from the message. If you're interested in picking up a copy of my book, Disruptive Successor, go to disruptivesuccessor.com.